The rise and fall of Tesla stock. Tesla, Incorporated, is an American electric vehicle and clean energy company headquartered in Austin, Texas. Tesla designs and manufactures electric vehicles, battery energy storage, from home to grid scale, solar panels and solar roof tiles, and related products and services. Elon Musk is the CEO and co-founder of SpaceX and Tesla Incorporated. He is also the founder of Neuralink, a company that is developing implantable brain-machine interfaces, and the founder and CEO of The Boring Company, a tunnel construction company. Musk has established a reputation as an imaginative and aspirational businessman who is dedicated to creating and advancing sustainable transportation and energy options. When Tesla overtook Apple as the most traded stock globally, he also became one of the richest individuals in the world. Tesla became the favorite stock of retail investors by a significant margin after they invested $2.9 billion on it in 2021 and $15.4 billion in 2022. The company's poor management caused things to change for Tesla over time, and as a result, it is presently the fourth worst performing stock in the S&P 500 in terms of market cap value loss. While the benchmark, the S&P 500 index of the stock market, has only dropped 19%, the stock has already lost more than 65% of its value this year. The inflated stock price of Tesla was seen by many Wall Street experts as a bubble that would eventually burst. As investors, we are particularly looking forward to this since it will be quite educational. Due to this, we'll be showing you the rise and fall of Tesla stock in today's video. Before going any further, please support our efforts by giving us a like, and remember to subscribe to our channel so you never miss a video. The rise of Tesla. Martin Eberhard and Mark Tarpenning, two Silicon Valley engineers, launched Tesla in 2003 with the goal of demonstrating that electric automobiles may be better, faster, and more exciting to drive than gasoline cars. In order to create a powerful, gorgeous, and emission-free electric vehicle, Tesla was formally formed in 2003. Other co-founders were Ian Wright, who departed Tesla in 2004, and J.B. Straubel, who served as the organization's Chief Technology Officer, or CTO, from 2004 to 2019. Elon Musk has established himself as the face of Tesla and is sometimes mistaken for its creator. The first fundraising round, however, was sponsored by Musk in 2004, and he quickly became the board's chairman. Tesla created the Roadster, its first car, between 2004 and 2008, during which time it saw significant growth. A 5.3 million square foot building that had formerly belonged to Toyota and General Motors was the site of the new company's production facility in Fremont, California. The factory is known as NUMMI, which includes 2 paint facilities and 1.5 miles of assembly lines. In 2008, Musk became the company's CEO and product architect, positions he still holds as of December 2022. That same year, Tesla released its first automobile, the Roadster sports car. It's not just a car, but one of the strongest automotive statements on the road. Tesla, as part of its secret to success, continues to focus on creating electric cars and making electric vehicle, or EV, powertrain systems and components. As of 2021, the company has a network of 438 stores and galleries, 100 service centers, and more than 30,000 superchargers, charging portals, in over 3,100 locations. One of the company's trademarks is to focus on one product at a time, and while Tesla continues making the Model S, it is rolling out new models to expand its customer base. Other models include the less expensive Model 3 sedan, the SUV-style Model X, and the crossover Model Y. To move with the changing times, Tesla focuses on launching new offerings that target a wider range of customers. To stay competitive in the niche market, Tesla Motors has expanded its operations globally with locations in the US and China. In the next few years, Tesla became the most successful automaker company in the United States, and this was due to the increasing demand for electric cars. The electric car market was growing, with luxury automakers like Mercedes-Benz and BMW jumping into the space. Analysts forecasted that the total global sales of electric vehicles will be approximately 29.5% of all new car sales by 2030. Morgan Stanley's auto analyst Adam Jonas predicted that the company would fall short by 40% of its goal to produce 500,000 cars by 2020. However, Tesla produced more than 510,000 cars by the end of 2020, exceeding its goal by 2%. Tesla grew so fast that it went from having 899 employees in 2010 to adding more than 99,000 staff by the start of 2022. In the year 2020 alone, Tesla's share price has rocketed upward more than 700%, delighting Tesla's investors and loyal fans, while leaving many seasoned Wall Street analysts scratching their heads. Short sellers lost $38 billion over the course of Tesla's monumental 2020 rally. That epic surge has made Tesla the most valuable car company in the world, catapulting it above and beyond Goliaths like Toyota and Ford. It has also given Elon Musk, Tesla's CEO of 13 years, the title of richest person on Earth, thanks to his significant stake in the company. Retail investor enthusiasm was boosted by a stock split that took place in the summer of 2020, which reduced the price of Tesla shares for individual investors while leaving the stock's intrinsic worth unchanged. And Tesla's inclusion in the S&P 500 later that year, which served as a de facto endorsement by the index committee and forced funds that monitor the index to purchase the stock, significantly aided the company's cause. Despite all of those potential upsides, many experts argue that the frenzy surrounding Tesla is nothing more than a bubble that will burst sooner or later. The fall of Tesla in 2022. According to CNBC, shares of Tesla stock has plummeted since CEO Elon Musk took over Twitter, falling more than 45% in about over 2 months. In all, the company's stock has dropped more than 69% since January, when Musk began investing in Twitter. By comparison, the tech-heavy Nasdaq has fallen about half as far over that period. Musk said on Tuesday that he will resign as head of Twitter when the company identifies a successor. The news temporarily buoyed Tesla's stock before it again turned downward. The electric vehicle company faces falling demand amid recession fears, heightened competition, and pandemic-induced production challenges. Moreover, some analysts and major investors have sharply criticized Musk over a perceived lack of focus on Tesla, saying the company needs leadership as it contends with an adverse business environment. We believe increasing negative sentiment on Twitter could linger long-term, limiting its financial performance and become an ongoing overhang on TSLA. Oppenheimer analyst Colin Rush wrote in a note this month downgrading shares to perform from outperform. Some key factors have led to the fall of Tesla shares. Number 1. Interest rate hikes by the Federal Reserve. Interest rate hikes at the Federal Reserve have spiked borrowing costs, making car purchases more difficult for consumers already strained by sky-high inflation. Meanwhile, pandemic-induced production bottlenecks and chip shortages have persisted, increasing costs and causing delivery delays. Elon Musk has blamed the massive drop in Tesla stock this year on the Federal Reserve, arguing the U.S. central bank's interest rate hikes have made the stock market less appealing to investors. Tesla is executing better than ever, Musk tweeted on Friday in response to a Tesla shareholder who blamed him for the roughly $600 billion decline in Tesla's market capitalization this year. "We don't control the Federal Reserve," the CEO of Tesla, SpaceX, and Twitter added. "That is the real problem here." The Fed increased interest rates from near zero in March to over 4% today in an effort to chill the economy and slow the rate of price increases as U.S. inflation raced to 40-year highs this year. Higher rates tend to have an adverse effect on asset prices since they encourage saving over consumption and make borrowing more expensive. Number 2. Acquisition of Twitter by Elon Musk. Tesla stock has plummeted since CEO Elon Musk took over Twitter, falling more than 45% in about over 2 months. Musk sold billions of dollars worth of his Tesla holdings to finance the Twitter takeover. On December 14, 2022, Tesla shares extended declines to hit their lowest level in more than 2 years, as investors including a fanboy of CEO Elon Musk lashed out at Musk's distraction from the electric car company following his buy of Twitter. Investors are concerned that Musk's decision to purchase Twitter may cause him to spend less time on Tesla, and that he may sell more Tesla shares to support the faltering social media company. Tesla is the most valuable automaker in the world, and its shares have underperformed major automakers and tech companies this year. Major Tesla shareholders have urged Musk to concentrate on Tesla, which has a market valuation of $392 billion, much higher than the $44 billion Musk paid to acquire Twitter. Number 3. Tesla Incorporated suspended car production at its Shanghai plant, extending a planned 8-day production halt at its largest worldwide plant by car output, according to people familiar with the matter. The decision to prolong the work stoppage was made as a result of a wave of COVID-19 infections among Tesla's employees and suppliers, the sources claimed. The short-term stop follows a recent decline in the demand for Tesla automobiles on a worldwide scale. On Saturday, Tesla told some of its Shanghai employees that it would stop car production that day, a day earlier than originally planned, the People said. The company earlier told staff that production would resume on January 2nd. That negative news impacted the market and caused Tesla shares to close down 11%. According to Time magazine, the electric vehicle maker's market valuation has shrunk to roughly $345 billion, below that of Walmart, JP Morgan Chase, and Nvidia Corp. This latest sell-off also cost Tesla its position among the 10 highest valued companies in the S&P 500 index, a distinction it had held since joining the benchmark in December 2020. Concerns that demand is waning have increased with news of lower manufacturing in Shanghai, which follows last week's story that Tesla was giving U.S. customers a $7,500 discount to accept delivery of its 2 highest volume models before the end of the year. These concerns represent a huge risk for Tesla, whose valuation is dependent on its potential for future development. Most of the stock's weaknesses this year is due to indicators showing flagging demand globally, said Craig Irwin, an analyst at Roth Capital Partners. Tesla's estimated revenue growth is still amazing, but not $385 billion market valuation type amazing, he said, referring to the value at the end of last week. Finally, the key factor, number 4, Tesla is overvalued. For many financial analysts and investors, Tesla was overvalued by 80%. Michael Burry, an investor who founded the hedge fund Scion Capital in 2000 and became famous for profiting from the subprime mortgage crisis in 2007, predicted Tesla's stock crash 2 years ago. According to Burry, Tesla was hugely overvalued compared with its rivals. He pointed to its meager sales and slim profits and described its battery technology as inferior. Burry put his money where his mouth is by purchasing bearish put options against Tesla stock in the first quarter of 2021 and ramping up his bet in the second quarter. The Scion chief also pointed to Musk's stock sales at the time as evidence that the Tesla CEO knew his company was overvalued. Burry is a broken clock, Musk fired back. There are some important factors that lead investors to believe that Tesla is overvalued, and these are: firstly, it's likely that the electric vehicle market is going to get a lot more competitive. The barriers to entry aren't too high. The products are not too complex compared to internal combustion engines, and mainstream automotive companies are investing in building massive scale. 100% of gross profit and net income is generated from the automotive sector, as Tesla's other businesses lose money, making them an automobile manufacturing company, not a technology company. According to Stephen Fiorio, a financial analyst from Seeking Alpha, Tesla's financial statements do not justify the high value of its shares. For example, the price-to-sales, or PS ratio, shows how much investors are willing to pay per dollar of sales per stock. The combination of Toyota, Volkswagen, Daimler, BMW, General Motors, Ford, Honda, Ferrari, Nissan, Subaru, Volvo, and Mazda has generated $1.38 trillion in revenue over the past 12 consecutive months of a company's performance data, putting their P/S at 0.56. While Tesla has generated $62.19 billion in revenue and has 15.87 PS. As a combined entity, these 12 companies have generated $118.29 billion in net income, while Tesla has produced $8.4 billion. Fiorio said that it is not justifiable that Tesla has a larger market cap than these 12 companies combined when they are producing more money than Tesla. In conclusion, Tesla's stock price has been led by market sentiment rather than its intrinsic value, or rather the conclusion is that for many economists, the price of Tesla's shares has been led by the euphoria and loyalty of its investors beyond the real value of the price of its shares. We hope you've enjoyed our video today, so if you have enjoyed it, please like, comment, and subscribe. If you have any questions or recommendations, please let us know in the comments section, and we will respond to them as soon as possible.